Hey everybody, this is Terrence with Boykin Realty, brokered by Keller Williams. I hope you're having a great day. I'm here today with Eduardo Rodriguez of Fidelity Bank to talk to you a little bit about bridge loans. I wanted to talk to you guys today about a lending program that I came across that most realtors do not know about. And it's a great opportunity for everyone right now if you're looking at selling your current home and buying your next house. One of the big issues we have right now, especially with COVID and lockdowns and really being limited on what we can do, it's really difficult to show houses right now, especially with kids being in school or out of school, a lot of people working from home. That just doesn't work well for a lot of people. Second, we know that our home prices are really high right now, so everybody wants to take advantage of that. Perfect scenario is to be qualified enough so that you can buy your new house, move into it, and then sell your second house. That way we can sell it vacant and we don't have to bother you with showings, and your family's only moving once. A lot of people like to think they can do that, but then we find out they can't. Eduardo has a great loan program that will allow you to do that. And Eduardo, I just wanted you to talk for a few minutes about that program and really inform everybody on how it can help them.
Sure. Well, first, Terrence, thanks for having me on. I really appreciate all the support. And I'd love to talk about the program that we have. The real estate market is really hot and right now, and I do know that folks are having a lot of hard decisions to make as far as, with the pandemic and trying to show their home and then trying to juggle, trying to purchase a home. And so one of the programs, it's not really new, it's just something that we've always had. It's called the Bridge Loan Program. And the way that it works is, we look at the current home that you currently have. We see how much equity there is in that home. And then we look at the home that you're looking to buy. And what the bank is willing to do is the bank is willing to use the equity that you have in your home. And instead of you having to get a loan to actually get the equity out, we're able to apply that equity towards the purchase of your new home. One of the ways we do that is that bridge loan. We're basically going to take a collateral lien on both properties. But what it does is when you go to purchase that new home, you're able to use as much equity as you have of your current home towards the purchase of that new home. And that new loan technically will not be a mortgage yet. It will be an interest-only 12-month loan. And so it will provide you 12 months where you're just paying that loan interest only, and allow you to kind of stage your home or get everything out of your previous home and then sell your home. And once you sell your original home, those proceeds will then be used to pay down this new temporary loan, if you will. And what will happen is we'll just convert that into a mortgage, and then you'll have sold your previous home, you'll have your new home, and you'll benefit from just the less stress and relief of having this process go a lot easier than having to juggle trying to sell a home and buy a home at the same time. So I know you probably have some questions, Terrence, for our viewers, but what have you been hearing, or what are some things I can help with?
What you just said was huge for a lot of our clients, because as we know in the triangle, we have seen our housing market increase. I think I ran numbers where we were up 8% September 2020 over September 2019. So that's where that equity part comes into play. Most people don't know actually how much equity they have in their home. A lot of people I come across, they're anywhere from 75 to $250,000 worth of equity in their home. So you're telling me we can use that to purchase their next home, correct?
Yes, and obviously it works best the more equity you have. There's some folks that, I've talked to some customers last week that they just own their house free and clear.
Yeah.
And so if you have basically 100% of your equity available, that's great. but it doesn't have to be that much. It just has to be enough to where that new home makes sense and we can apply it towards that new home.
Okay.
If you have a small mortgage on that current home, that's okay. We'll run the numbers and we'll see if it works. This program won't work for everyone, but it definitely will work for the folks that have paid down a considerable amount of debt, or just their home has appreciated so much that they have that extra value, that extra equity.
Got it. The other place I see this really helping is a lot of clients do want to buy first and sell second, but when they do that in a normal scenario, now they have 2 full mortgage payments. I thought I heard you say they're paying interest only on one of them. Can you explain a little bit about that and kind of what kind of numbers they might be looking at?
Sure. So I'll clarify. So with the new loan, it is a temporary loan, good for 12 months, and it is interest only. So the payment will be interest only. You will still, however, have your original mortgage with your primary home. So whatever that mortgage payment is, you'll still be making those payments. It's just that once you sell your home and you get the proceeds, you'll then use that towards your temporary loan. But just to kind of give you some round numbers, so let's just say, for instance, your new home is going to be $500,000, and the current equity that you have in your home is something like $350,000, as an example. That new value would be $850,000. We minus out your current mortgage. So let's just say, round numbers, you may have a new mortgage of $500,000. Well, you're going to be paying just interest only on that $500,000. And that may be close to $1,300 a month, as an example. And so you're probably paying more on that on your current mortgage, but you would be paying maybe double that if it was a mortgage that you had to get that new home. And so you'd probably be paying your current mortgage payment and then an extra $1,300 a month, on interest. But that's a great way to get you in your home and then just take away all that stress of having to sell your current home while you're doing that.
And the other side of that is another great thing about being in the triangle market right now. You said interest only for up to 12 months. Mm-hmm. Most houses, if we price them right for the condition they're in, I can't make promises, but chances are they're going to sell within a month. Yeah. So there's not a lot you have to worry about right there in today's market. So it's kind of a win-win all around on this bridge loan program.
Yeah.
Excellent. Well, I just wanted everybody to know a little bit about that. I will have contact information if you want to reach out to him, kind of run some scenarios with him, because think about it, to move into a brand new house and only have, like he said, maybe a $1,300 to maybe $2,000 extra payment just for that. That will help a lot of our people get to that new construction or new home that they want to. So a lot of options available right now that a lot of people don't realize. Thank you for coming out and talking with us today, Eduardo. If you guys have any ideas or questions about future videos, or if you just like an equity update, so you know how much equity you have in your home that might make one of these bridge loans possible, please give us a call, 919-675-9967, or find us at RaleighsBestAgent.com. Have a great 2021, guys.